So what could have gone down in the history of the financial markets on September 9th, 2025 is not going to go down in history as Black Tuesday, but rather as the Tuesday that begins the absolute craziest fucking bubble of all motherfucking times. So basically, the job revisions, everybody knows, the cat is out of the bag, and it's the biggest revision of the job numbers the world has ever seen. So basically, they openly admitted that they've been manufacturing these fucking fake numbers to the magnitude of 100,000 jobs every month. When you remember, trading from April 2024 through April 2025, every time they reported the job report, it was inflated by a minimum of 100,000 jobs each and every fucking time. The question is, if they would have reported the actual fucking numbers, would the market even be at the current highs like it is? Of course not. Would the market have similar reactions on the days of the job reports? Absolutely not. So the question is, now that it is apparent that United States have been in a recession for quite some time, now that it is apparent that all these job reports, total fucking fairy tale, how U.S. consumer is strong, how everything is. The question is, why is the market dropping? Why did we only get a minuscule 15-point reaction to the downside, after which the market basically did nothing? And on the news that the court is possibly going to speed track the tariff revision, the market is up after hours. Not even to mention Oracle, that missed on earnings, missed on revenue, and the stock is almost up 30% after hours. Now, thank God we caught a little trade today on CNPS, which is down 100 points after hours, to compensate for our bearish stance on the indexes, which I made pretty obvious yesterday that we're not going to back off from shorting all-time highs under conditions which were quite obvious, but yet the market decided to brush off the clear stagflation confirmation. And I'm sure, based off what we have seen today, the biggest job revision ever, the biggest lie confessed, revealed, sealed, confirmed, okay? What we've been talking about here in the last couple of years is official, but yet the market has no reaction to the downside. So many are puzzled, many are trying to figure out, well, how can this be? Well, it's very simple, okay? Well, I think the easiest summary of what's happening in the market right now, you can gather from Rick Reader interview with CNBC today. There is a sentence in the interview. By the way, Rick Reader is CEO of BlackRock, for those of you that may not know. So basically, he said in the interview, one line that just really stuck with me. He said, well, things are not that bad. Only half of the country is doing shitty, and the other half of the country is doing great. So basically, they're choosing to look through glass half full. Hey, who gives a shit? All the people that don't have money, they're doing shitty. All the guys on Wall Street, we're doing great. So we're gonna keep pushing this market higher. That's just a quick summary of what BlackRock CEO said today. So clearly, I mean, he is bullish out of his mind. All the other banks are bullish out of their mind, because their borrowing costs, like on short-term borrowing costs, are about to go down. But they're making loans on projects and, other loans on longer-term basis. So the long-term interest rates are going to go up. So banks are officially, if you just look at that metric, there's something to get excited about, because, hey, doing nothing, you're going to make a lot more than what you used to do before, considering the volume and, the magnitude of the lending that some of these banks are doing. I mean, that just basically business same as usual, but you end up making a lot more because of this difference in the rates between the short-term and the longer-term rate. So clearly that may seem as a positive, but I'm here to tell you guys, I mean, this opens the doors based off the sentiment based off the way that Wall Street completely brushed off stagflation today. It also tells us they're probably going to brush off a slightly elevated inflation number tomorrow. And they're also going to brush off the slightly elevated inflation number Thursday. Basically, Wall Street does not give a shit, okay, because they're mesmerized by the AI boom. And AI boom literally translates into job losses in the real economy. And they're saying that shit is good, and that is something to be bullish on, and that's the lenses that they're looking at through the market. Now, I think we're about to go into the greatest fucking bubble of all times in the financial history. And so what should have happened today, Wall Street decided to postpone to possibly a month, 2, 3, 4, 5 months down the line. But within that comes some great news, because it is a lot easier to short the bubble when it is bursting than the market, the way it's been lately, just stale, right? The market just won't make the move expansion. I would rather have the market make a move with expansion in either direction. Fuck it, just move. We need the fucking market to move. I don't give a shit if it goes up by 60 plus points or down by 60 plus points, but it needs to fucking move. When we trade directional options, we need the market to move. The shit that kills your options is the kind of market that you see all day today, where nothing goes up, nothing goes down, and sure, we finally get a slightly larger size move after hours, but still, in relation to, what the normal market moves have been in not so distant history, like 5 months ago, then there's no comparison. So it would be awesome to see the market move in either fucking direction. And knowing the stance and where Wall Street is coming from, maybe the rally could fucking actually last for just a little bit longer, because I don't know of a bigger catalyst than what we have had today that actually would really get everybody at least thinking that, holy shit, all this time we were making market assumptions while market was really in a fucking recession. We were making assumptions that United States consumer is strong, that the job market is strong, and a lot of the calls that Wall Street analysts have been making were literally based on these assumptions. So now you get pure confirmation, sealed and delivered as official numbers. And the Wall Street just don't give a shit. So that's fine. Let them get some more fucking bonuses in the next month and the next couple of months. And, let this thing go into, it is in a bubble now, but apparently the bubble for the Wall Street is just not fucking big enough yet. So let's go. Let's blow it up to the biggest bubble ever. And I promise you, I'll be the first one standing there shorting the fuck out of it. But guys, at this point, there are definite opportunities in the market to short. Just like I'm giving you an example. Okay, there is Oracle, miss on earnings, miss on revenue. Stock is up fucking 80 points after hours. SNPS is another ticker that's down 100 points from 600 to 504 at the time I'm recording this. Stocks still go both ways in this market, despite of how bullish BlackRock CEO may be on the near term future. But I would say there's going to be some bigger movements in the market. And guys, stale market doesn't do anybody any good. So I would be just happy to see the fucking market move finally by at least 60 points in either direction. And within that, I think is going to come the opportunity. So, because within that, you get some reversals. If the market pumps 60, 70 points upside, surely there's a reversal of 30 points to the downside. Maybe after that, dip continuation for another 40 points high. So with that market, you can work as a day trader, as a swing trader. You can put some trades intraday that can go at least 5x, damn it. But the last big trade we had was Friday, when the market actually went from 65.40 all the way down to 452. So that was almost a 90-point catch, and that produced, depending on the strike, anything from 10, 15 up to 20x, literally within an hour. So Last 2 days, the market is just not doing shit. Nothing yesterday, nothing today. So as long as we don't have more days like today and yesterday, I mean, we're about to make a ton of money. So that's the exciting part. That is something to look forward to. And at this point, you know, the way these banks are looking at things, the way Oracle is flying after missing on all this stuff, guys, it's absolutely remarkable. So anyway, I think next couple of days, probably the reaction of the market to something that's going to be proven stagflation further is going to be more of what we have seen today. So we are slightly changing a strategy. We're definitely shorting some components of the market, but we're not necessarily shorting NASDAQ. For sure, NASDAQ is out of the fucking question. Shorting NASDAQ after what Oracle has done after hours, it is what it is. So, with that said, guys, let this market run. Let it make some moves, and we'll be there shorting the balances. So, get in touch with the 30 mark moves if you got any questions. We do have some beautiful trade setups for tomorrow. So get in touch with us, guys, and be ready to rock and roll. I think we're about to go in unprecedented times in the history of the financial markets, and I hope you're going to be able to be there and take advantage of them. Let's go.